Hello all, you're listening to Relax Radio India with me Preesha. On to the headlines for today. At $500 billion, India has world's fifth largest foreign exchange reserves. A strong reserve buffer is a cushion against market volatility and gives foreign investors and credit rating companies added comfort that the government can meet its debt obligations despite a deteriorating fiscal outlook and the economy's first likely contraction in more than 4 decades. India has accumulated the world's fifth largest foreign exchange reserves at more than $500 billion, making it a bright spot in an otherwise dismal economy. The reserves were bolstered by a rare current account surplus in the first quarter, a return of inflows into the local stock market and foreign direct investment, including into a unit of Reliance Industries Limited, which is India's largest company by revenue, that allowed the central bank to mop up close to $25 billion in foreign exchange to add to its reserves in the quarter through June. Here's a deeper look at India's external finances. About the bigger pile, the level of reserves is enough to cover 13 months of imports and is equivalent to nearly a fifth of the country's gross domestic product. It's also the fifth largest in the world after China, Japan, Switzerland, and Russia, according to the International Monetary Fund. Data from the central bank on Friday showed reserves were at $506.8 billion as of June 26. Coming to the falling import, India's trade gap narrowed to a 13-year low in May, as imports declined faster than exports. While the contraction reduces the need for dollars to fund purchases for now, it does highlight a worrying trend that demand in the economy has been hit hard amid one of the world's strictest pandemic lockdowns. As a growing and emerging market economy, India needs to import capital goods and machinery to keep its industrial sector humming. Cheaper oil also helped lower the import bill. Now, on balance, India's current account, the broadest measure of trade in goods and services, is likely to remain in surplus in the April-June period. But a recovery in imports might tilt the balance for the full year. Improvement in economic activity over next few quarters is likely to push the current account back into deficit, says analysts. Lower commodity prices and a weak global demand are likely to negatively affect remittances inflows and services exports, weighing further on the current account balance. As far as capital flows are concerned, after outflows in March amid a global market sell-off, foreign investment into Indian stocks have picked up in the past 2 months as risk appetite returned. In addition, inflows have increased with the sale of stakes in blue chip companies like Reliance, which divested from its Jio digital platform, and Kotak Mahindra Bank Limited. Lastly, on external debt, data from the central bank show India's external debt rose to $558.5 billion as of March 2020 from $474.4 billion 5 years ago. While the level has gone up, the ratio of foreign exchange reserves to overall debt has also risen to 85.5% from 72% in 2015. The level of debt that foreigners are likely to hold, including sovereign bonds, is likely to go up as India works to open its debt market to non-residents. The country is aiming for a 7% weighting in indexes tracked by global investors, with an inclusion likely to attract billions of dollars at a time when public finances are deteriorating. Okay, this was all about India's foreign exchange reserves. Hope you got a clear picture of it. So it's time to sign off, and this is Preesha saying bye. And remember to like, share and subscribe Relax Radio India.